Alright guys, what is up? We're going to do a market recap for Friday, the 12th of July. Now, initially I didn't get to take these trades. There was two trades that I saw that I think were very good trades and would have been very good setups and had good risk to reward. But let's look at the market. So yesterday, we had a 600 point sell-off. I don't think anyone could have really predicted this sell-off. Once again, very crazy sell-off, not expected, as we know. But if you go, whoops, if you go to the daily, or look at the daily, we sold straight back to this imbalance and got, obviously this daily fair value up is going to cause some move to the upside. So you have that in the back of your mind. Now let's zoom in a little more. You can see where the real imbalance is. And we took 4-hour lows. So we have the sell side level here, and we are in a bounce range, a reject range, a fair value gap. So here on the hourly, we had PPI today. PPI comes down and sweeps all these lows. So PPI scoops all this liquidity up, meaning price is probably going to go higher. In pre-market, I marked out equilibrium of this whole entire range right here because likely, like putting the biases together, we are bullish, but we do expect price to rebalance to, discount equilibrium of this 600 point sell-off. Now, there was a trade I was watching very closely, but I didn't get to take because I had to leave and go do something. But it was right around here, so market open, you kind of don't have anything going on. What we do have is, from the start, we've been respecting this. We respected this 15-minute fair value gap all morning. Kind of gave me bullish pressure. I wanted to see these highs taken. That was my real bias, is these highs right here. So we're respecting it, and then we ended up launching straight to it, and I was zoomed in, but there was really no entry to this. It was kind of all chop right here. I was looking to take a trade in this area off this pullback, but because I looked at this as, your final market structure shift before you retraced to then go higher, but it wasn't the cleanest displacement, and it also wasn't, there was no fair value gap. There's kind of an order block in here, you kind of have this as, you could be your order block. Come down. Nothing really clean in there for me to find an entry off of. So then I'm watching price on a 5-minute because I want to have a higher time frame and efficiency to be able to take a trade. And we formed this big 5-minute fair value gap. Price is coming down into it. Now, I kid you not, I literally had this marked out, but then I had to leave. I had this marked. So, sorry, I'm talking very fast. I'm trying to put this at the macro. Like that. But I had this marked out, and then we come down and we also form an SMT. We're in the 5-minute fair value gap, and you see we come back, a clear displacement. You kind of even get a market structure shift on the 1-minute. Like that, you come back down, enter off the candle, straight to this buy side level. This is the area you would target. You wouldn't target anything higher, personally. I don't think so. And there's two reasons for that. One is because you don't think price is going to run straight to this buy side level. You just don't know. And two, you want to target the low-hanging fruit. You want to target what where price is going to go. Like, it's not a guessing game. It's not a P&L game. It's understanding the movement of price and where it's going to go. You have your SMT. You have your higher time frame imbalance. You have clear consolidation up here. Now, someone in my Discord took this trade, and there's a 15-second chart. I don't know what that is. But if you look at this chart, you clearly have soup off those lows, SMT, clean displacement to the upside, and then you have retrace, SMT again to the high. But as you can see, this is the clean trade. And yeah, but then I was doing some back testing, and I was looking over here, and I'm like, okay, what do we have here? This is really clean. So if you zoom out and you look to the 15-minute, we have a big 15-minute imbalance. Now price draws right into that, and where do we draw to? We draw right to equilibrium, discount, premium, whatever the hell you want to call it. Now we sell off into it. We do get some displacement through these lows, so you kind of expect maybe price, but then higher time frame is the 15-minute fair value up, so the higher time frame outweighs. And you're kind of watching the 5-minute to see how we're going to react in this 15-minute imbalance. And you get this candle closure above right here. This one candle is a market structure shift on the 5-minute. This is giving a bullish order flow and saying we're going to go to the upside. Zoom in even more to the 1-minute, and so right as we get this candle close, it's a market structure shift on the 5-minute, but also the 1-minute, and it's clean displacement on the 1-minute to the upside, giving you a nice fair value gap. and you can wait till price draws into here. It just depends on how you'd want to enter. I like to wait usually for price to either come down into that level around this 50% mark, or if we start getting rejection candles like this, then you hop in. But if you wait until the 50% mark, you get maybe a good fill down here. And I'm really learning where I want to put my stops. Like, do I want to put my stops on that candle, you know, crazy risk reward, or do I want to put my stops over this candle? And it looks like it's more like this candle. But just looking at this is a very clean trade. You're targeting this is a clear market maker buy model right here. This one, it will be more clean on like a 15-second or a 30-second time frame. But you look like this, I mean, you have your higher time frame imbalance, 15-minute imbalance. You have a clear consolidation, clear sell-off. I mean, this would be your break-even stops. You come here. You don't really have a standard deviation. Let's see if this isn't really standard deviation, but kind of matches up. Not really. But and you wouldn't target anything higher because you have no clear generated liquidity, clear buy side. This is the clear buy side. This is what you want to see take in. That is the trade. And yeah, that's definitely the cleanest setup I've seen this week. P&L wise, I'm finishing the week red, but I don't care about that personally. More worried about just building good habits and things of that nature. But I'm down almost like a percent, as you can see. Let's see if you can see this. Yeah, I'm down almost a percent. I had that one loss yesterday, and that's really been it. And honestly, the trading has been really good on this account. I've been very consistent. You know, I was full size yesterday. We went over those trades. I'm okay with losing those. This is a beautiful trade to catch, but I wasn't here. And yeah, I mean, that's all I have for you guys, honestly. These are the two trades that I saw that were clean from the market today. Nothing really else. And yeah, I mean, nothing really else to talk about. I mean, news next week looks pretty good, so that's exciting. Let's see if there was a higher time frame inbound. Maybe it was hourly. Yeah, I mean, you're in an hourly imbalance too. Yeah, like hourly imbalance. Come up. There's your market structure shift. Cleaner market structure on the 5-minute. That's that trade. I think this is a great trade. And yeah, that's all I have for you guys today. Make sure you subscribe, like, join my Discord if you want to. You can always ask me questions or things like that, or whatever you have about trading. Thank you guys so much. Have a great weekend.